Google's parent company Alphabet has become the latest company to hit a market cap of $1 trillion following tech rivals Apple, Microsoft, and Amazon. By the way, Amazon no longer has that $1 trillion market cap. This, of course, comes amid a long rally in FANG stock. Google reached its latest numerical milestone as it is facing some of its biggest tests, including stricter regulatory scrutiny both in the U.S. and around the globe. With us now to discuss this is Tom Forte, D.A. Davidson Senior Research Analyst. And are they well positioned, do you think, to deal with the regulatory headwinds they face globally to maintain their valuation, or at least their market cap, at $1 trillion plus?
Sure. So first off, Adam and Julie, thanks for having me on. The way that I think about it is this is a tremendous accomplishment. So when you think about Google's history from search to mobile with Android, and then the emergence of YouTube, I think it's an amazing accomplishment. But Adam, I really like your question because I've been thinking a lot about this. I talk about the four horsemen of big tech: Amazon, Apple, Google, and Facebook. And I think global regulators are realizing and coming to terms with the notion that they have too much influence on consumers' lives. And I anticipate that you'll see more regulations on a global basis to address that. So you had GDPR in 2019, and then more recently of California with their privacy laws taking into effect in January of this year. And I think that's going to pose challenges to a couple of your trillion-dollar club there on sustaining that valuation, including Google.
I'm also curious with Google specifically, when you're looking, aside from regulatory challenges, there was a narrative for a while that Alphabet had to diversify in terms of getting more diverse revenue streams. And it hasn't really done that, has it? And it hasn't really mattered, has it?
Well, the diversification, I think, comes from YouTube. But I think you point out something excellent, which is I've been talking a lot about Amazon and breaking up duopolies. And I think Amazon has an opportunity to break up the duopoly in shipping that is FedEx and UPS. And Amazon has an opportunity to break up the duopoly in digital advertising, which is Facebook and Google. So to me, the diversification for Google has been, again, the emergence of YouTube, but they're still heavily dependent on search, and they're still heavily dependent on advertising in general.
Tom, I think everyone has talked a lot and focused a lot about the risks to Alphabet share price and the risks to the business. But maybe riffing a little bit off the last question, what do you think are the opportunities here for investors in Alphabet, specifically, in areas such as autonomous vehicles, where they have been one of the leading companies in that field? What do you think are the opportunities or the bright spots for the company?
So two things. One observation on what is the commonality other than tech for the 4 trillion or near trillion market caps, and it's cloud. And you see that with AWS for Amazon, Azure for Microsoft, and Google Cloud for Google. So they're clearly starting to do better in cloud computing, and that's clearly a large opportunity with sustained growth and profitability. On the autonomous driving, you bring up an excellent point. So having just attended the Consumer Electronics Show, I think you just talked about Qualcomm and 5G. So one of the benefits for 5G in general is the ability for advancing autonomous driving, and Google has certainly been an early adopter there, as they've also been an early adopter in drone delivery, beating Amazon to be the first to do a commercial delivery in the U.S. via drone for Walgreens. So I do think that autonomous driving is an interesting opportunity for Google in the future, but those companies, the trillion-dollar club, they're doing an amazing job leveraging cloud computing as well.
Hey, Tom, Brian Chung here. Can we talk about the pending acquisition of Fitbit? Does this signal maybe further away from Google, and how does that represent maybe their future trajectory as a company that might actually be trying to get into wearables and take on the likes of Apple?
Yep, so excellent question. And normally I wear both my Apple Watch and my Fitbit watch. Currently my Fitbit watch is charging. But I look at that acquisition and I look at it as Google realizing that they were behind Apple in healthcare data. Because we could talk about it being a hardware play with Fitbit's devices, but I really think it's more of a data play. Google wants to have the healthcare data, wants to know when consumers are on the move, wants to know how active they are and things of that nature. And I do wonder if it'll face more regulatory scrutiny given my prior comment. But I thought that was an amazing acquisition by Google from a healthcare data standpoint.
So potentially another opportunity. Thank you, Tom. Tom Forte, D.A. Davidson, Senior
Thank
Research
you.
Analyst. Always good to see you. Thanks.
Hey investors, Zach Guzman here. Are you interested in learning more about the markets and getting the latest financial news? Well, then click right here to subscribe to our Yahoo Finance YouTube channel. Get the latest up-to-the-minute market analysis, big interviews in the world of finance, and information on how to manage your money every day wherever you are.